Okay, so we're live. Thank you for joining me. Let's go over to the example I was going to use for demonstrating what the flat wave is. So the example that I have here is one on British pound, US dollar, yen. I'm saying that, but you can find this sort of examples in many markets. Now the flat wave talks about where you have in this particular case, for example, so you have a move up and a move down, and the retracement, the general requirement of retracement is approximately 90%. Now I'm not going to stick to an absolute clinical 90% because in a volatile market sometimes it happens where you get slightly less, but nevertheless the concept of a flat correction is still valid. So what we have 90% is this green line here. Okay, so it's 88.6%. So if you ignore everything else, and we need an extension on that one. Okay, so this one you can see it retraced more than 88.6%, so you can say it's comfortably 90% retracement. Okay, so that is a one requirement of a flat correction. Another requirement of flat correction is that we must have three wave moves, so wave like one swing, retracement, and second swing, so that makes three waves. Then likewise we have one swing, retracement, and three waves. Now incidentally, when somebody sees this, they will jump to it and say, oh, that is a bearish head and shoulder pattern. Well, that would be misinterpretation. The reason why it would be misinterpretation is because to form a proper bearish head and shoulder pattern, what you should have is you should have a move coming up from the bottom like that, and then forming a sort of head and shoulder pattern kind of a look. Then it will be bearish. The reason why is because this potentially is a reversal pattern. So in a reversal pattern you expect something to reverse. So where is it reversing from? So it would be reversing from the move well down here, gone up. So it's had a substantial rise in comparison to the head. You can't have just a head on its own. This is just a head on its own. Even if we had a move coming up from here into there, it would still be not adequate, because in proportion to the head you really haven't got much of a move, so it's got nothing really to reverse. Now sometimes it might work, but in most cases it won't work. And likewise, if for example we were moving down from the top and we simply had head and shoulder, which people will call that a bullish head and shoulder, with a view of resolving to the upside, that would only be possible. Maybe we need to increase the size of a head a little bit to make it look like head and shoulder, like so. That would be only possible if we had this move coming up from way up from the top, coming down, forming head and shoulder, then you got reversal. But until we get that, it's a little bit too premature to simply start calling things head and shoulder. But what you do individually, of course, is entirely up to you. But I'm just pointing out that these patterns are ideally meant for reversal pattern. So the question then arises, what is a reversal? What is reversing? And if it's nothing to reverse, then how can you expect head and shoulder pattern to play out? So in this particular case, coming back to this example, head and shoulder was not the correct example, not the correct recognition of this pattern. The pattern is a flat, and in a flat you have A, B and C, three swings up, A, B and C, three swings down, and the retracement of this should be approximately 90%. So if you get 86%, it's within the margin. You know, few percentages, you're not going to invalidate something, because it will still be counted as a correction. For example, contrasting the flat with a traditional zigzag. If you have a zigzag like this, like that, okay, so that is a zigzag. That means that this one is, so if I just put a labels on, this could be a small a, this one could be B, and then this top would be wave C. Okay, so that would be a correction, but then starting off from here, so we'll call this X, then we'll call this one a larger degree wave A in bracket, larger degree wave B in bracket, and then a larger degree wave, should have been wave C in there, so wave C in bracket. Okay, so if you got that, then usually what happens is in this wave from X to A here, you get 5 small internal waves. Okay, so you get basically a wave 1, wave 2, wave 3, wave 4, and wave 5. Okay, approximately. Then you get ABC back, and again you get 5 waves down. Five waves down like that. That would be called normal typical zigzag. But here you don't have that. Here you have, you know, if you look at this, I take this square away. So if you look at this, it's basically up, down, and up, and that forms, in my view, the first cycle. And then you get a pullback, and you again get another cycle going up. So this could be WXY to give you wave A, wave B, and then this strong wave C. So it's not a typical 5 wave, 3 wave, and 5 wave combination. So all of this is a 3 wave up and a 3 wave down. So if that is correct, then we call that flat. And what that means is that if you were to label this, you would potentially label this like wave A, this here as a wave B, and then this here as an outcome wave C. And the point to note is that once you get this 3 wave up and a 3 wave down, then what comes out is a 5 wave. Now 5 wave doesn't mean it goes up to here, neither does it mean it will just stop here. Okay, so it could, in all probability, could go all the way to there, or like this one did over up to here, or it could simply come to here and then finish. So there's no specific rule to say how far this wave C would go. But wave C normally has 5 waves in contrast to these 3 swings, and you can see that here quite clearly. You can see, for example, if I was to number this, you will call that one wave 1, this one here wave 2, and it's not very difficult because you're not having to agonize on where the waves are. Sometimes they're not so clear, but usually they are relatively clear. So this one here wave 4, and this one here wave 5. Okay, so once you expect that, we would have known, and in fact I have videos that I recorded doing live session when we were playing out this, both on pound yen and also in a dollar index, is that we were looking for 5 wave outcome, and the minimum expectation would be it could stop short, of course. So we're only talking about, in reality, what happens, the only market will tell us. But once you're in this here and you got this area nearly carved out, you're expecting low to form, you're expecting 5 wave to come out. What your expectation would be at least to come back and retest this high. So you'll be expecting this to move at least to that sort of level there, right? That would be your minimum expectation. Now if that was the case, then you could have considered entering long entry on this particular example, is that your stop would be just below here, because you had a 90% retracement. It can go into almost 100% retracement, right? So you could have had a stop just over here. But I would also say that a slight variance of this is an expanded flat, and in contrast with this one, the expanded flat would look like this. So if I draw it out, you'll know. So for example, the first wave swing, retracement, and that completes the first part. Second part would be coming back down, for example, like that, and it could drop more. Okay, so many people, simply because I draw these lines, many of our friends would simply say, your line is stopping at 850. Well, that's not the case. I mean, my intention for drawing these and drawing well ahead of time is not simply to say exactly where these lines are falling, but it's a concept. If you understand the concept is that in a flat wave, which is not a zigzag, it's in a contrast to the zigzag, it's a flat wave. Flat wave can come to about 90% approximately of this decline, or it could go to 138.2%. So if I was to put Fibonacci on this schematic diagram here, what I would have is from here retracement like that, and I'll make an application to the Bitcoin once I've done this, and we want 138.2%. Okay, so this is where it comes. So technically, if you were looking at this and supposing that was the Bitcoin, then it's possible for this wave to stop at 90%, or it could go all the way to 138% of this. So if you were numbering this, you'd be calling this one wave A, and this one as a wave B. Implication is still the same, and that is once you get 3 swings up, 3 swings down, which is a flat wave. It doesn't look like it because they call this one irregular because in contrast to this one, this leg traveled well beyond the origin of this wave A. Okay, so it's called an expanded flat, but it's still nevertheless flat, and the reason why it's called flat is because it's got 3 swings up, 3 swings down, and then the outcome is still the same. Outcome would be 5 wave swing to the upside, and that 5 wave swing will be different from the construction of this part. It will be different from what you see here, and you can see that in reality what happened. When I say different, you can see how clean and how impulsive this wave was in contrast to what we saw here. So this here took so long a time, and in fact if you were to actually measure the time in day train, you'll see from here to there, for example, it took 26 bars. From here to here it took 26 bars, 55, which is nearly twice the distance. So together it took nearly 77 bars of this daily bars. And then if you measure this wave C, it took from here to there, see, you know, just same as that. So it overall it only took about 2/3 of a distance, 2/3 of the time, and it traveled a lot further. In this case it went beyond the origin of wave A. And how much did it go beyond the origin of wave A? Well, you only have to put in Fibonacci, and I'm not saying they all do that, because as I said, they could come back and say, for example, only go up to the height of wave A. Sometimes they might even stop a little bit short of wave A. It just depends on where this is found in overall scheme of things. If it is found somewhere in the mid cycle, then it's possible that it might not go all the way to there before a downtrend begins. It could probably go up to the all-time high if this was the section here. So it will go the height of an A, or it could go maybe like, you know, just slightly short of that. So, and then the 5 wave will be finished. This 5 wave you see, it will be within this, you'll see small 1, 2, 3, 4 and 5, like that. You'll see 5 waves complete. Okay, so you have 3 different variants now. One is where you have 3 swings and wave B retraces almost 90% or more than 90% or 100%, and then you get an outcome of wave C with a 5 wave move. Or in this case you see A, B, C down, which comes down and it goes up to about 138% length of this, measured from, you know, retracement. In other words, 138% retracement of the wave A. and then wave B would finish, and that would then continue higher, and it could continue higher, it could continue well up there, or it could continue up to the height of A, or it could stop a little bit short. Now there is no way of knowing that. There is no Elliott wave rule which will tell you at this point here, when you're in this area, all you can consider is going long, because you've got 3 waves up, 3 waves down, and it has retraced 138% of this leg. So at this point you will be looking for going long, and your expectation would be is that it will at least come back to this kind of structure, or probably back to the high. That would be your expectation, and it could go beyond that. Then that would be a bonus. Okay, so that's a general concept of what a flat waves are. Flat wave requires, instead of a zigzag that I was showing you here, where each of this impulsive leg have a 5 internal waves, these ones do not have that. These ones can simply have within this one you get A, B and C. That's possible. You know, you can get A, B and C like that. Okay, then you get, so then you would have A, B and C to form a wave A. Then you get a small zigzag back here for wave B, and then this would be wave C, and in which case you got A, B and C to complete this wave A. You get A, B and C back to complete this wave B, and then you get a 5 wave move up. So this is the 5 wave move up you would see. This is one example on pound yen. The other example would be is a dollar index chart, and if I was to take you to dollar index chart, let me see. Now I'll have to go back to this one to say draw a new chart. So I'm showing you this because in historical context you can see how price actually played out, and then we will go back into focusing on the Bitcoin where the action is really there. And I think if you grasp that and don't fret over the fact that I said in my line it's 1100 and it went to 1155 or 1160 or even 1250, then my charts are wrong. You know, instead of fretting over things like that, get the bigger picture, get the grasp of a basic concept, and I think you will be very, very surprised, pleasantly surprised about what we might be heading into. So here I want an index. Okay, so this is the dollar index. I'm going to go into the daily chart of dollar index, right? And I'm going to show you an example of where the flats are. This is the flat. I don't know whether you can notice it. If you notice it, let me know that you did notice it when I come back to check on the question. But this area here is flat, right? That is a flat, and I picked this flat out again at the same time when this was developing, and I almost drew a schematic diagram out of what this was looking like. And in fact, if you really want to see and don't just take my word for it, let me take you there. If I can find this one, dollar index, and it's a daily chart I'm looking at, and I haven't really done much on that chart since, so you'll still be able to see some of my squiggles on there. It's a dollar index daily chart that I have. If not, then I will share that with you again later. And I think I did briefly featured that in my last presentation when I tried to explain the flat correction. If there was a quicker way of finding it on here, I would be very, very pleased with that, but fortunately you have to keep going back and forth to see where they are. But if not, then I will not waste too much time, and for the time being you'll have to take my chart. Here it is. Okay, I haven't labeled this one. I think it must be one of the other chart. But anyway, that's a concept I was talking about. So let me go back to the other chart that I was featuring, then I don't mess up. So this is the flat. You see the flat, you can see what happened. The price came down and you get A, B and C up. Okay, so that's a zigzag 3-wave up. Then again you got A, B, well, it's not even A, B and C, it's W, X and Y, but essentially 3 swings. So you've got 3 swings. You've got that, that and that coming back down. Okay, so again it's not head and shoulder, which is what many people will be thinking about. It's not head and shoulder, it's a flat correction. So in this flat correction we've got wave A, wave B, and what came out of it is that. So if you grasp what this is, this area here is a complete cycle. Okay, it's a complete cycle because you've got wave A, wave B and wave C. And the important point to grasp is that once you get these 3 swings up, 3 swings down, what comes out is a wave C, and most often that wave C is strong and it will probably take you above the height of the wave here. But even if it doesn't, then at least potentially you've got that much room. And look at the risk that you're running. You're running a risk, so you can put once you know that it's broken out, then there's hardly any risk. Because in real life, if this is a daily chart, in real life you've got a bottom, forming hammer, not quite hammer, but it's a bottom forming reversal candle. Then you got a strong bullish candle, a small pause, and the next bullish candle where the trend was broken. So if you took 3 to 4 days to identify that we have now broken out, you'll be broken out over here somewhere. Okay, so at that level you know you're broken out. So if you now went long somewhere there, your stop could be over here, because you know you are, even if it retraces, you're not expecting it to take out that low. Okay, because it's now broken to the upside, minor trend line broken after having formed 3 swings up, 3 swings down. What you're expecting is a 5-wave up, and the 5-wave up here is caught by here, look. So this here is wave 1, wave 2, then wave 3, wave 4 and wave 5. Okay, so approximately there is a wave 5, or even you might have, for example, this one could be a rather complex wave, and in fact at that time I was thoroughly confused about this section as to how is it that is it wave 5 finished, or are we still in a wave 4, and I never felt too happy. But the fact that we caught effectively on dollar index, we recognize here that we are breaking to the upside. That means most of the US dollar pairs will be moving to the downside in a 5-wave move also on a daily. So this would have lasted you several days. For example, just the date range from here, it lasted approximately 30 bars. In contrast to this takes so much time in comparison to wave C, right? So if you look at this one, for example, even if you measure it from here to here, it took 53 bars. From there to there, it took 45 bars. So they're literally equal, but not quite equal. So overall, it took 97 bars. So 97 bars, and this distance here, which actually starts from there, this distance here is approximately 40 bars. So you can say literally that the wave C is strong. It travels along and it travels fast, and therefore if you take the overall 3 waves, then this 40 is approximately half the size of that. Okay, so this took 45 days, so this is 40. Sometime it might be 40, it might be a little bit longer. So but approximately what I'm trying to say is that this sometimes take half the distance of the overall pattern here, which means, for example, this 3 swing up. So it travels faster and further than what took place here. And the waves are dynamic, really dynamic. You can see, I don't need you to really let me rephrase that. I don't think you need me to explain to you what dynamic waves is. This is dynamic, and you'll be able to put effectively a trend line up, just like common wave trend line. You'll be able to put trend line up, and it will be clean, really fast trend line like that. And that is completely different from what you're seeing here. Here you're constantly wondering, is it going up, is it going down, is it going up, is it going down, and you've no idea where it's going. Your moving averages here, if you put them, they will probably be start intertwining each other. Let me just put them on for the sake of doing that. So if I, for example, just went for a straightforward moving average, or even a exponential moving average, or weighted moving average, doesn't matter. Okay, so here, for example, I can just change this one to say shorter term, like many people would use, and say call that one say 20 period, right? And the other common one is a 50 period, so I'll change that one to 50 period, and you'll see what I mean, that they will really be twisted. See, look, now when this is coming down, this is going up. Is it going up? Because now the price has gone up, but apparently they've only gone up by a distance of this much. Okay, so if I just change the color on that one, so it's gone up by that much. But then if I was to put this one on the lower side, you'll see that below the moving average we had a similar, so it's really oscillated on either side, right? But then over here, what happened? Is it going up, is it going down? And sometimes, if for example all you had is this, right, all you had is this, then neither you nor me or any Elliotician can tell you exactly what's on the other side, except that you've got this A, B and C up. It's clearly three wave. It's not 1, 2 and 3, although it could develop into one, but up to here, even if you was to call that wave 1, this is the wave 2, then potentially this is wave 3, but in a wave 3 you need a 5 waves. So here so far you go 1, 2, this is 3, but it's losing momentum, because you can see this one rose like that, right? So that's a steeper rise, and in a wave 3 we should be going even steeper, but it's not. Look, it's slowing down, because this wave started off from here, for example. If I can, okay, let me try that again. Okay, so this one started off from there, but it's definitely not steeper as wave 1. So because it's not as steep as wave 1, this cannot be wave 3, because for this to be wave 3 it should be steep like that, but it's not. So immediately you would begin to think that a wave 3 is not really strong wave 3, because it's losing, right from here you can see it's losing momentum, and because it's losing momentum it cannot be wave 3. So if it's not wave 3, then what is it? You know, the only wave it could be is A, B and C. So at that stage you have no clear idea exactly, but then we begin to see price moving that way. So you think, okay, so it's coming back and retracing. Is it that this is A, B and C, and now potentially, and this is what everybody's guessing, potentially if this is A, B and C, we had a strong wave down, A, B and C, are we going to get a wave to the downside like that, right? So you're thinking a way ahead before the price gets there. Now if it doesn't get there, that doesn't mean you're wrong. So if I post a chart and I'm saying that we had a strong wave down, and in fact this wave down is not really 5 wave, it's more like this. You can see it's more like that. Okay, so really this is 3-wave move down. You got this leading diagonal wave 1 or A, B and C. So if this was a 5-wave move, then I have a strong expectation to say that this is A, B, C done. Now we are going to get another 5-wave move. So it will be very similar to this other chart I was showing you, where we had this kind of zigzag. You got except that it will be on the reverse side. It will be like 5-wave up, ABC down, another 5-wave up. Okay, so that completes this zigzag. So if that was the case, then this chart. So if that was the case, then on here I would be expecting another wave down. But the fact that I had 3 waves here, so it's not really proper 5 waves. So immediately we got this retracement. So I would be expecting a retracement, but then I was given a gift, right? So when we arrive here, now this is clearly staring in your face as a 3 swing up, 3 swing down. So if you identify that, then immediately here you'll be so excited, because you'll be able to do just exactly what I did here, like that. You put a trend line, because until then you don't know, but otherwise you'll be looking potentially for going long, and other analysis would have indicated we're going long. Sometimes there are time symmetry, like the one I just showed you on the other chart. So once you get that and you see a trend line break, so if this one here is a trend line break, that's a clear case now of potentially we're in a new upswing. So immediately you can consider potential long entry with a retest of this high. That would be your minimum expectation. Your stop can go just below that. Okay, or if you went on an intraday chart, maybe using like a 4-hour chart, you might be able to put your stop maybe just below here. But the expectation is going to go 5 waves, and you will count 5 waves, right? So far we got 1, we got 2, we got, moving up. Okay, now right, so what happened here is that this 3-wave up, actually the cycle hadn't completed, so now it's completed there. So we are back to the same square one, is that we're still looking for long side, and we know now the wave actually started up there. So here we had almost, in fact, like a double, you got this larger flat wave, within that you also got small flat wave, so it's like a flat wave upon flat wave. So in that case it's a little bit different from what we see on the Bitcoin happening, but you've got a flat wave completing up to here, and then you've got another flat wave completing just here, starting from there. Okay, so you got ABC down, ABC up, and you got ABC down, right? So now you got double flat wave upon flat wave. But once you got that clear, now we know we're in an up leg, and that up leg is going to be 5-wave move up. So you could have entered on this break of a trend line, right? And then your moving averages now are beginning to get into line, although over here they were twisting up and down, but here now it looks like the short one is moving up and the longer one will probably start turning pretty close to that. You see, look, the longer one is flattening out, so potentially you could have gone long at that area with a stop just below this last low here. So your stop can be fairly close, and your upside then, to retest of that, but if you're really fortunate, it will go beyond that. Okay, so that would be the general flat wave construction, and you can see this in many different places. If you were to go through, you'll find them all over the place, flat waves happening like that, in different cycles. This is dollar index now. So by the way, on a dollar index, what I'm expecting is, if you're interested in this at all, is that what we had here in a dollar index is essentially nothing to do with a flat wave so far, but it's a leading diagonal. That's a leading diagonal. So now we are expecting wave A, wave B, and wave C, and wave C must have 5 waves. So chances are, what I'm expecting, this is where Elliott wave helps. So you begin to start picturing in your mind what's going to happen, right? Not that it will happen, but what you're expecting, and then if your analysis confirms, you got a good trade going on. So here, for example, I'm expecting that we've had a 3 swing up, we had a 3 swing down, not exactly a flat wave, but nevertheless it is a flat wave, although it didn't come down almost 90% here. If I put a fib zone, we'll see exactly how much it came down by, and therefore I'm a little bit generous on requirement of exact 90, but the outcome is still the same. It doesn't actually alter the outcome. If I put this one at 61%, yeah, 61%. So it went more than 61, so most likely 78% in that case. So if I do this one here, 78%. So 78% didn't quite make it. So we went over 61, but didn't quite make it to 78. But now the outcome is that we've got A, B, C up. We essentially got A, B, and C down, right? So now we are looking for 5 wave to the upside. So we've got 3 waves, We got a 3 wave down. Now we're looking for 5 wave to the upside. So we possibly got wave 1, wave 2. We're forming a wave 3 possibly. I don't know how far that will go, but say it goes like that. Then you expect a small retracement, and then we probably expect that. That's one possibility. So I'm already looking for that to happen. And then what I would do is I would put a fibs on this decline, and quite possibly it might do 50% retracement. So where is the 50% retracement? There it is, 50% retracement. So it's possible that we might actually see this culminating in 5 waves. Still 5 waves, because 1, 2, 3, 4 and 5. That's quite possible. Once that's happened, then we are expecting this to continue down, because we had a 5 wave here, ABC retracement, so we at least expected 5 wave down. Now if that 5 wave happens to be this being wave 1, this being wave 2, this one wave 3, then not only it will be 5 wave down, but it will be a very strong wave 5, because this is 1, this one is 2, this will be 3, and wave 3 is often strongest and the longest. So this is what I'm beginning to see. So now when I'm drawing these lines out, I'm putting out like a schematic idea of what I'm expecting, and then I see what happens in this area. If it doesn't confirm, I'm not rushing to jump in long or short. I don't want to know anything about here. Whatever happens, it can do whatever it wants. So I'm generous. It could be that this might actually go like this, or it might get 1, 2. This wave 3 can become really strong, and it could go all the way to here, wave 3, maybe wave 4, and then possibly going up for wave 5. That's fine. I'm okay with that, right? But I am expecting is A, B and C. Wherever it finishes, whether it's here or finishes there, it doesn't matter. I'll be patient. I don't know it's going to finish here, so I'm not going to go long. If it's going to go up to here, maybe with a hindsight I think, okay, I could have gone long, but I have no idea whether it's going to stop here or it's going to higher. What I do know is I'm expecting 5 waves up, and until the 5 waves are up, I'm waiting, and I will wait. And in that, during the time I'm waiting, I'm looking the structure of these waves in between to give me further clues as I walk in to find the top. Once I've found the top, then I know I have a very strong, high probability of a really good trade turning out. Not for just $100 or $50, but I'm talking about at least a length of that coming down to the bottom side. At least a length, but most likely it could be 161.8% long from wherever the top is. Okay, and even on this one, I can begin to start while I'm waiting. I can begin to do this sort of thing, for example. And that's exactly what I've been doing with my Bitcoin chart that I will come to in a second. And for those who are here with me, and those who might see me post my ideas and right away begin to think that Danvi doesn't know what he's doing. Danvi is keep changing lines every day. Anybody can do that. Anybody can move this line from here and put it there and put it there. But yeah, I agree. Anybody can do that. You don't need to be a genius to put lines up. But I'm not just putting lines up in willy-nilly all over the place. I'm putting lines up where I think there is a high probability of something happening. So for example, if I say this one has some kind of a geometrical relationship to this one, then it happens to be same length, and I put it from here. In fact, I should put it from there. Then I'm expecting that I could go up to here, and I can go even up to higher. It's possible that this 5 wave will take me right up to here, or even almost retest that. It doesn't matter. Doesn't matter, because because in between I don't know what's happening. I don't want to jump in to the long side or to the short side. I'm prepared to wait, and I may be that maybe it would take me on a daily chart maybe 2-3 weeks and nothing happened, right? So in between, somebody might say, well, okay, then what about me jumping into hourly chart and taking small swings up and down, and if the trend is up, then I'm prepared to ride it up. Well, yeah, fine. Then that's that. If you work it that way and you're happy with that, no problem. But the real juicy trade is not here. The juicy trade is once the 5 waves are up. So you don't want to jump in too quickly. You want to allow the 5 waves to clear, and you want to see clear 5 waves. Not something where you have to really focus with a magnifying glass and start dissecting 1 hour bar and those sort of things will help only toward the end. In between, they won't help. So in between, you need to try and stay to 4 hour or a daily chart, ideally, right? Or maybe at the most going to 1 hour chart, but nothing shorter than that. So that's what you're expecting on a flat wave or on a sort of a zigzag, is when that zigzag is finished, then the trend will resume. So people are talking about trading in the direction of the trend, then you would be neutral in this area possibly, or only scalping with a small position. But a real trade would happen, because in the trend here, 5 wave down, trend is down. That 5 wave from the high tells you now you don't need moving averages, you don't need anything else. You just need to understand that this is the 5 wave down, so you're going to get ABC and you're going to get 5 wave out. That is in contrast to this pattern where you see 1, 2 and 3 swing up, 1, 2 and 3 swing down. It's in contrast to that, because we've got 5 wave. So after zigzag or ABC correction, you expect another 5 wave. Where you see a flat correction like this one, basically price going horizontally and retracing almost 90%, and I would say probably anything up to 80-85%. I'm quite happy with that. So if you see 3 swing up, and the flat correction simply means 3 swing, not necessarily even 90%, right, or 80%. 3 swing, you want 3 swing up, 3 swing down, then the outcome of the wave C is a 5 wave. So if you understood that, let me see whether you need me to explain that in any more detail, or to give you any further example before we go on to look at the real example in Bitcoin, where I think if you cotton on to what I'm saying, then rather than be fussed about, what is the news coming out, or what is China doing, or what is this new exchange is doing, or anything like that, you do not care, because I don't care what happens with the news. Sometimes with the news will line up with my analysis, and at other times they might actually be the catalyst. So for example, if this move is going up and I'm expecting it to turn down, I might find the news come out around this area, and if it comes out of that area, it may be that it will actually be the catalyst for the market to turn back to the other side. And I don't sometimes know if I'm expecting a turn at this area, and then logic says that I should have some news. If that's the case, the logic says that in order for this market that's going up to turn down, it must have a negative news. Otherwise, it's going to rocket up. That's what they say, right? Now, both could happen. It could happen that I'm in the mid of the trend, and if the news came out, it would rocket up. I agree. Especially if it happens to be positive, then reason dictates that positive news would cause the price to continue in the current trend. So it could accelerate. But in accelerating, it's only doing what I'm expecting it to do. I'm expecting 5 waves. So this will somehow form a 5 wave. It acts like a catalyst. Okay? And it's a catalyst for either continuation of a trend or a catalyst for a reversal. Because when, for example, news happened at this level, and I've got nearly 5 waves complete, then I know that regardless of whatever the news is, it's going to cause turnaround in that area. It doesn't mean turnaround at exactly 82.43. It doesn't mean that. It means somewhere in that zone where I have 5 waves completing, it will cause a reversal. Even if it is a good news, because the good news, what market participant will do, some of the smart money, is they'll use the good news to drive the market really up, so everybody gets trapped the wrong way, and then the market would collapse. And market people will often do that. In a bullish market, the good news mean that it will be coming toward the end of the cycle, so market participant will use it to drive up, and in driving it up, they will actually complete the cycle. And then all who wanted to buy have bought. So no more buyers to come in. And therefore, market then turned back the other way. And all those who entered long here, they will be in a serious trouble. They'll have to exit out. Right? And maybe the new shorts will appear on surface, and the trend will accelerate. And many people were hoping for this to continue up to here, for example, will have started reasoning that, oh, this market is going back the other way. I better get out now where I've still got a little bit of profit on the table, right? And they'll get out. So all of those people will be out and the market will turn. And conversely, you can have a situation where the market is moving up. It's in a mid-cycle, news come up, and wave 3 becomes really explosive. You know, this wave 3 could have ended here, but because of the news, it could really extend to here. You know, so it can be both ways. Sometimes people think that bad news turn the market down, but it doesn't, because if the bad news happen toward the end of the cycle at the low, it will actually be a catalyst for the market turn to the other side. By using the same logic, is that on the bad news, people will try to sell and trap the new shorts, and the weak longs will be exiting, and then the market will turn. So I don't think that it's a one-way ticket. You know, logically, I know if it's a good news, everybody thinks market will go up, and it's a bad news, everybody thinks market will collapse. But it doesn't. Sometimes it happens the other way. And just so that you know, when the dollar index was here, okay, Bernanke made a comment that they might consider quantitative easing, tapering rather, quantitative easing to taper there. What did the market do? You know, I think you will find that either he made it on that particular day, which is 10th of July, or the comment came on 10th of July, market already did this, and the day he made the comment, market gapped down. And then we've seen basically market going. Ever since he opened his mouth and he made a comment in the press that they might consider tapering quantitative easing, that's what the market did. So quantitative easing is good for the dollar index. But why didn't the dollar index go up? Why did the smart money drive the market in anticipation of that announcement? And once the announcement was out, which was bullish, market actually turned the other way. So I don't dismiss the news, but I don't let it influence me overly in anticipating what's going to happen, unless that news happens at a relevant places. Then I begin to see what might happen, and I might actually be even able to say if it's going to be good, then market will be using that to drive the market up for a final exit, and then everybody will turn the other way. So I can begin to see how it might be interpreted, regardless of what kind of a news it might come out. And when the news was coming out here, I was posting comment to say that whatever Bernanke says, the market is already turned. So whatever Bernanke says, it's only going to now accelerate the market to the other side. If it's a bullish, then people are not going to believe it, or it's already taken into account and the price has already overly compensated for that expectation. So now anything short of a miracle is actually disappointed. Market is going to sell the other way. So that's a little bit off the topic, but this is the point we were talking about, flat correction. So let me come back now and just check with you, see where you are. Are there any specific questions, or you want me to help you go over anything before I go into applying this, what we've just discussed, in a real life example at a 2 degrees on Bitcoin? The first degree is exactly the one that we just showed here, like this one here. See, we got 2 degrees of ABC movement in here, but it's contained in this area. But in a Bitcoin, you got a bigger A, B, and C, or rather coming down here, you had the price drop, just like this, 3 wave down. You had a price drop, then you got ABC up, ABC down, and at the moment we are currently in this leg. Okay, we're in this leg, which we are looking for it to form a top, and it must have 5 wave out. And then the other big one we are looking for is potentially they would be like A, B, and C, 3 swing down. Now we are forming A, B, and C, right? I'll go into that in a moment, but that's basically the 2 degree level. We're expecting a Bitcoin to complete flat correction. Yeah, excited to see how I interpret the current flat on BT. Okay, well, let me go over to that then, assuming that there are no other questions, or you need something clarifying, because the other one is going to be real example, live example, and if I get it wrong, I'm not proud. I will pick it up well in time before it becomes embarrassingly bad. Okay, so that's the other part of the Elliott wave, is sometimes you could be wrong, you could be misinterpreting, but hopefully you won't misinterpret for too long. You see, that's the beauty of Elliott wave. It's not easy, it is complicated, but you know, if when you get them right, they're really worth gold, really gold. I mean, gold is falling at the moment, so it's a little bit what you might call not a quite apt thing to say, but you know what I'm saying, loosely used. It's really I mean, if you have traded Bitcoin in the last month or two, then you could be in a very clean and very profitable section, and you would ignore everything in between. Just ignore it, let your mind completely be clean, because you are now focusing on that big trend, right? And if you catch even one of them, I think you'll do really well. But if you catch the big one, that's going to be a real big giant one, I think. It could sometimes dwarf into something else, but nevertheless, you enter in with what you see and what you interpret, and you have a strategy to ensure that if you get it wrong, you'll be caught short only for a short while, and you'll have a stop to either take you out, or you will reinterpret, adjust your accounts, and then get back into sync of the market. So that's my precept for Elliott wave, and where I think that you cannot really match anything with Elliott wave. You really cannot. Only other thing people do is like highs and lows, support and resistance, which is common technical analysis. Nothing wrong with that. I don't decry it, don't belittle it in any way. I use them myself. But where you are in a new area, you've got nothing. You've got no idea how far this trend is going to continue, because people say trend is your friend until it bends. So when do you know it's going to bend? Well, Elliott wave could potentially tell you a possible zone, not an exact level, but you know, within reasonable limit, it will tell you positive, not positive, but a sort of a zone where a possible trend could end, and then you can be looking for clues that would give you an indication that either the momentum is waning, or some price action is suggesting bottom is already in, etc. So if there's no other question, then I'll take you across to the chart that we've been discussing in a flat chart, and apply it to the Bitcoin. So okay, I'll go to the Bitcoin then. So we'll leave this one out, and we'll go into the Bitcoin. So this chart you see is already posted, published, so I've got nothing to hide. It's published, and just so that you keep your mind clean and don't become biased, or don't start jumping to the conclusion that my analysis is wrong. Okay, my analysis, remember, we were saying in this here, in here we were saying potentially this example here, in this example here, we were saying potentially in a flat correction, wave B can go to 138.2%. Not it always does, but it can go that far. Okay, so keep that in mind while we look at the real example here. So I have posted in the published area under my profile. You'll see that at one time I was thinking this was A, B and C, and I'm not wrong in that. That is correct. And exactly from that point, I posted a comment to say that we've had a top, and a couple of our friends who are following Elliott wave also concurred that maybe we do have a top. And when I was expecting this, there were a couple of areas where I expected we might have okay, so what I'm going to do is I'm going to take a copy of this chart so I don't mess it up. So once I've covered that, then I can explain to you exactly what I think now is going to pan out, and then you won't need me to explain what's going to follow. You can actually track the market yourself. Okay, so in here I was expecting when we were at wave A, and the reason why is nothing mystical except that we've had potentially ABC up for wave A, ABC down for wave B, and then potentially what looks like A, B and C up. Okay, so I thought that is it. So potentially I was looking for a short. So we did have a short, but it wasn't really that profitable. So if anybody entered short, you would have probably still got a bit of money or scratch trade, no big deal. But you know, if it failed then you could have gone the other way, because that means that what we've got is W, X and Y kind of thing. So is wave A, we get retracement wave B. Now we are expecting wave C, and remember wave C always have 5 waves. So here I was confused. I'm not telling you I wasn't, because this up to here doesn't look very. In fact, if I was to draw a square around there, this one here, in this area, right, I wasn't sure. I knew that when we had this, that it wasn't an impulsive move to the downside, because remember what I'm expecting 5 wave decline, and what we had here was nothing like an impulsive 5 wave. I'm expecting a move like this as a part of a decline. We didn't have that. So that means there was going to be a further upside. So if it's going to be a further upside, I then have to revise my view. And I don't think that, for any technician or even any trader, there is a shame in having to revise your view. But at least you are revising it within safe time period and safe distance. So you are not caught short too long on the wrong side. So once I knew that this was not impulsive to the downside, which was what I was expecting, then what I said to myself is I put a trend line up. You can apply that on the bottom, and potentially we had rising trend channel. So I was then saying that, okay, so what we've got is we've got A, we've got B, we're expecting C. Now the wave C can be long, or it can be just going back to this A, or a little bit longer. So from round about here, around 850 to 875, I was still expecting market to end and come down. But no big deal, because in a sense there is, you're looking for bigger scheme. So in a bigger scheme, the fact that it didn't stop here at 875 and instead it went to here, in somebody's book that would be like catastrophic error. Well, fine. But equally, when I got this one here, I realized that we are moving up in a wave C, and maybe I had wave 1, wave 2, wave 3, wave 4, wave 5. So at that wave 5, I thought, okay, maybe this wave is over. So my first attempt to short was wrong. My second attempt to short was wrong. We went up, but then now I can see what's happened. So we've had this leading diagonal wave 1, wave 2, wave 3, wave 4, and wave 5. So we finished. So for all intent and purposes, we've got A, we got B, and we got C. So I was then expecting a sharp decline, and a couple of other friends of ours who follow Elliott wave also joined in, and up to here it looked like we've got a strong downtrend. So potentially if that was a strong downtrend, we should have had that. If I draw this trend line down here, that's what we should have had, because if it's an impulsive wave, you need that to gather momentum. So we had a -1, -2, -3, this congestion -4, we never had a wave 5. So within this area, I realized that something is not right here. We are not getting the 5 wave decline we were expecting, and we are still going up. So I then had to revise my view. My view was revised that my overall picture is not changed. This is definitely a flat, because from the discussion we've just had, you can see we've got 1, 2, 3 swing down. So we are now seeing 3 swing to the upside. Now we could have had possibly 1, 2, and 3 swing to here to satisfy that, but strictly speaking, it didn't quite make it to 90%. Okay, and I don't think it has to, but the guideline says that it needs to retrace 90%. So potentially that's not over. And then because this downtrend didn't come, now I'm expecting that we've probably got further upside. So if we look at a further upside, then in this area you can see we got drop down, then we got A, B, and C up. We got A, B, and C down. Now from here, I am blind just as much as you are blind. I cannot now fudge anything. I'm simply saying a concept. I could be completely wrong, and maybe this might dwarf into some other kind of pattern. It might not even turn out as a potential flat we are talking about. But the bigger picture is this flat. That's a big picture. And this is the one that you really need to focus on, because this is big 3 swing down for A. We are looking for big 3 swing swing 1, swing 2 somewhere, and a swing 3 to go up somewhere. I don't know where the swing 3 will actually end. This uptrend could finish here, and possibly why? Because we've got at this level is approximately 90% retracement of this decline. That's one reason. The other reason is that if I take all these away to simplify, okay, and if I was to put my Fibonacci projections on, then I'm looking from here to the height of that, and possibly this is the bottom somewhere here, or even at this level here. So you see 50% length of that could come to here, which is exactly where the 90% retracement comes in, and in that vicinity, not at exact level, but in that vicinity, I also have this pitchfork, which I think is quite interesting, because this pitchfork you've seen on my drawings that I've shared with you on almost on an ongoing basis, and also in my published chart, is I've used this outside swing here, and I use this one as my median line hook, and that presented me with this pitchfork. In that pitchfork, this is the first quarter, second quarter, third quarter, fourth quarter. So basically that pitchfork is divided in 4. It doesn't have to, but I've divided it in 4. And I found that this one came within a whisker, went back up, just went above this quarter, came straight back down, and it overshot that one. See, because it overshot this quarter by that much, there is possibility it would overshoot the same amount on the downside. Okay, so that was very interesting. Then when it went back up, it actually hit the upper parallel where it experienced some problem. We've literally gone sideways. So now I have increased this one, you can see, by one more quarter, right? So it's approximately same width as that, by one more quarter. So if this one goes up, then this is the upper parallel, this is the second parallel, or the second warning, like a warning signal. So it's quite possible that we might get there, and most likely we would finish. We might even find that if this particular trend channel was extended, let me just extend that to make sure I show you what I mean. So for example, if that trend channel is running up and I take this one away, but instead make a copy of this one, and basically what you're doing is you're trying to frame the chart so that first your minds have something to focus on, secondly gives you some structure, right? So it's possible we might get 5-wave up, but it will only simply be kissing this rising trend channel and fail, and approximately at that time we got a declining the upper parallel first warning line. Okay, so and secondly, we've also approaching an area where previously we've got this 90% retracement of that, and the 50% extension of this. Now remember what I said, that it's possible that if we don't have a top here, then this is the wave A. So we could, in a worst case scenario, we could actually retrace 138.2%. So let me just show you where that comes. So if this one was 138%, it will be 1.382. Yeah, 138.2. So see where that comes. See where it comes. It comes to about 1550, right? So in a worst case scenario, if this one really got legs, it could potentially go all the way there, and I still wouldn't be wrong. I would be wrong in expecting. I'm not wrong really. I'm expecting a potential top here, so I will look for evidence of topping pattern. I want to see 5 waves nearly completing in that area. So if it doesn't complete in that area, and instead we get like wave 1 like this, for example, right? Wave 2, then I know that we are heading a lot higher, right? Okay, something like that. Something in that order. So if this wave 1 becomes so strong that it just basically runs through all of this, then I know I cannot short it here. Why? Because I've not got a 5 wave. And it must be 5 wave, and toward the end it should be waning the momentum. Momentum should be literally dying, right? And in what particular way dying? On my 4-hour RSI, you see this high on RSI? I'm not expecting this to go up, even though the wave will be strong, but it will not have the same momentum as this first zigzag up. Not a zigzag, but you know what I mean. It's the first three wave swing up. So I will be expecting my RSI. So these are sort of the things I'm expecting. RSI now to go up, but fail to take out this high. And then RSI will give me possible divergence. Okay, so I'm looking for that. I'm looking for 5 wave completing, and 5 wave completing approximately in an area where it's approximately 90% retracement of the previous decline into this area, and is a 50% extension of this applied from the low. So and the other common one is 61.8% extension. So if I put that one on, where does that bring me? 61.8 is a green line. Okay, so where did that bring me? It brings me almost to exact high. So if it doesn't stop at about 1150, you know, I don't want people to start saying, oh, Danji is wrong. Danji doesn't know what he's talking about, right? Because I'm expecting a possible zone here, so I'll be getting ready. If it doesn't happen, that's fine. I'm going to be then expecting a top a little bit higher up. If it doesn't happen, then it could get all the way to the previous high. If it doesn't happen, it can get all the way to 1500, right? And I would still be, we will still be in 3 swing down, 3 swing up. And then what comes out of it is major 5 wave decline. So in fact, if it gets all the way to 1500, then you got this to come, right? You got that to come, and you will know that you will not be shorting here and have to suffer through all this pain. Either you'll be stopped out, or you'll actually be, if it breaks up here, we haven't got a 5 waves up, then you'll be looking to go long, because now we've got 5 wave expectation to the upside. But I'm not expecting that, because RSI needs to have a divergence with this first swing. So this is really an outsider. It's not something that I'm seriously considering, but I'm just laying out so that you know over the next week or two that whilst we are forming this top, is you've got possible boundaries. Okay, but my high likelihood is approximately this area here, which is around 1150 area as a round number, 1150, 1175, anywhere there. And if it continues, then I'm expecting that zone around 1150 to well 1200 to 1250. Okay, so it will be almost equal to that. But this is the real magic. So this is magic on 2 levels. One level is that you are looking for potential top for shorting back to down here. Now coming down to here, I'm saying the retest of this, which is quite possible. It can even drop below that, or it can actually stop a little bit short, could go up to 600. And then you will have, in a big picture, you will have what we call a running flat. Now I don't want you to get confused, but running flat means that we had this wave A down, wave B up, and wave C can't come down far enough to fulfill its full potential. So it stops short, 600 for example, right? And then simply take off from here. If that happen, it won't happen without us having 5 clear waves to the downside. And we want those clear impulsive waves, nothing like what we've seen here. We want 5 clear impulsive waves, wave 1 for example, wave 2 up, wave 3 down, wave 4 up, and wave 5 down, right? We want 5 waves like that. We want the 5 wave either to come down to wherever, 600, 550, 500, or even 450, or even 400, or even lower. It doesn't matter. But we want complete 5 wave. Once we had a complete 5 wave, a clear distinct 5 wave, each of these wave down must also have 5 waves in them. So that's what we are looking for. That's the fingerprint we are looking for. So until we see that fingerprint, we won't know exactly where the low is going to be. But you know, as a general schematic diagram, and from several other patterns that we have talked about and that I have seen personally, we can have a low here, or we can have a low back toward the previous significant low. And in fact, to me that makes a greater sense, because you know, many who are long, they will be stopped out if it falls below here, and then the market will take off. So I don't know exactly where, but I'm expecting 5 waves to complete by the time we get to 600, or 5 waves to complete to 450, or 5 waves to complete wherever, 350, 300, it doesn't matter. But this, I think, is really profitable. I'm telling you, I'm not trading this, but if I was trading this instrument and I had a way of trading this safely, I would really load up the boat. And when I say that, let me just explain that I don't trade big positions on a direct market exposure. I just don't, because in order to control the risk, you've probably seen our colleague called Asian Pepper, which has now changed, or rather, let me rephrase. Asian Pepper, who's changed his name back to what it should be, Thai, and I like that. I really like that. I think, like, I don't use like a pseudonym. I use shortened form of my name. My first name is Danji, so you see Dan, and second name is Varasani, which is my legal name, Danji Varasani, so I use it Dan V. So I think I like the idea of Thai now adopting his name, but what I'm saying is that he for example was talking about finding support and resistance, having trend channels and things like that, and then looking for possible area where you can enter long. And he was saying for a newbie is to only take a very small percentage of risk of this overall account size. So in other words, position sizing. So if I was to trade this and taking heed of what his suggestion was about position sizing, I can't take a big position, because even if I'm right and I have to suffer a day or so, or even hour or two of adverse movement, it will pop my eyeballs out and maybe even cause me to panic just like everybody else, and I would begin to get my account drawn out if I'm trading leverage position. Or I could be panicked out and I'll be stopped out at the wrong end. I won't have the courage to re-enter short, and then I will miss the boat and I will suffer the thing. So my best way for trading this sort of thing is to trade options. Now unfortunately Bitcoins don't have options, and maybe in time to come they might. If they were having that, I would be loading up for my options, and I would then get real leverage without taking the risk. But in this particular case, with a relatively nominal risk, if you see 5 waves completing by the time it gets to 11 or 1150, right, and you see market either topping in that area, then potentially you can enter short with your stop just above the previous high, because that's an immediate structure high over this wave 4-hour chart. Okay, so you could be taking a risk of about $150. No hiding of that fact. Unfortunately, we might, if it goes up and it fails at 1200, then your risk is reduced, right? But then you only got $50 risk. But if it just decides to top out here at 1175 or 1150, then you could have your risk anywhere from $150 to $125 or somewhere in that order. But then look at the downside. Is if you even come to 600, you'll be literally losing 50% of the value. It's, like $500 or $600 off that price. If it gets to 450, you're talking about nearly 600 plus, 700 plus dollars. It's a massive trade, and you probably will find it difficult to ride that, because just like over here, you will be getting some real spike down, spike ups in between. This beast is very volatile, and it's volatile because people are so highly energized and emotionally engaged, and if many of them are trading high leverage, that's what you get, right? So you would have a job. These Western films, you see cowboys on a ranch trying to mount on a bull and try and stay on a bull as long as he possibly can. Well, this would be your challenge. This would be your bull to see how long you can stay on it, right? But if you use good money management, you might be able to use a couple of tactics. Is simply just ride it with a position, or possibly you get enter in with a manageable position, add further to your position, scale out, and then maybe re-enter some of the positions, and then scale out and then re-enter some of the positions. You could probably do that, or just ride with one position, and you all have different ways of trading, right? But nevertheless, at that time the trend will be to the downside. That's a big picture. This is the main object of understanding the 3-wave correction to A, 3-wave correction to B to form a flat, and then the outcome is a 5-wave move to the downside. That's a real trophy. But in the shorter term, while we are talking, you've got this chart. Okay, so this one here, I think I have copied, so I can scribble on that. So whilst we are looking for this big one, you want to try and practice on a baby one, okay? And you want to use the baby one to gain the confidence. So this is my sketch of a baby one. This is the baby one. The big one is a big mother one, right? It's in contrast to the one I showed in my other chart where I was talking about possible mother and baby pattern, and that was basically this being the mother, right? And at this time I was expecting baby to form, but unfortunately the baby has become a little bit unruly and it's decided to do its own thing. So it's no longer mother and baby pattern. But this other one is, this one is a real mother and baby pattern. This one is a big mother, and within it mother is pregnant with this baby pattern, right? If you excuse my crude analogy. So on this one we are expecting that 5 waves. So here I'll focus into it so you see exactly what I'm talking about, and then you consider whether it's possible to go long. And in fact, potentially you should have gone long on this already. But here it is. You got A, B and C, 3 swings. So that's like, so if I was to put this one in, so this one here I could call wave A, right? Small a. Then we got A, B and C, or W, X, Y. It doesn't matter which way. But say for example here, I can call this one wave, in fact I'll feel comfortable in labeling this other way. I will label this one as W. I will label this one here as an X, and at other times I'll explain to you why, but here is an X, and then this one effectively becomes Y. Okay, so in a Y, on a larger term, because this is the W, so if this one becomes Y in shorter one, then I'll just contrast that. If this one becomes Y, then on a bigger one I'm calling this one a W. So let me make that a bigger W, like say a bracket and W, right? Then this one becomes bracket, come on, this one becomes bracket X, and then I'm expecting this one to become bracket and Y. Okay, bracket and Y. Well, actually if this was W, the W, A, B and C. Okay, so let me change that. Sorry for the confusion. So this one would be A, this one would be B, and then this one here would be C. Okay, so that's C. I just change that one there, C. Right, so just to go over the pattern now, is here we have a decline, ABC down, ABC back up, and ABC down. So the part that we are focusing is this one, from here to there. That's what we're focusing on. And we've got a flat correction. So flat correction meaning we got 3 swing up, 3 swing down. So what comes out of it is exactly what you saw here. You saw 3 swing up, 3 swing down. Okay, and the price came from the top. Remember, price came from the top, did ABC up, ABC down. So in exactly the same way, we've got price coming from the top, we've got ABC up, we've got ABC down. So this is the outcome. Outcome is a 5 wave. And if you then look at some friends were asking me about, you know, time. Well, unfortunately, oh, okay, you can read the time here now. So why wasn't I able to read the time before? Anyway, let me come to that. So what I've done now is you've seen me produce some charts with time symmetries on, and again, because it's not an exact science, you do have to play around with it, and sometimes you'll see symmetries and at other time probably not quite easy to make up. So what I did is I said, okay, let me measure the time it took from the low here to this high, from the low, which was 450 low. So I'm measuring from here where this line is 450 low, and is approximately 228 bars on this 2 hourly chart. Okay, so 228 bars. So over here I tried a few different concepts, and because this flat is something I didn't know that we could expect, and in fact nobody could have anticipated that, but now it's there, it's staring us in our eye. So I said, okay, if this took 228 days, then let me put 228 days and see where it comes. Comes here. So that's fine, that's interesting. And it's interesting more so because then I said, okay, so if this one, if I measure from the high to the end of this flat correction, it's 140 bars, right? So then I said, okay, so what is 140 bars out of this? Is it going to be giving me some Fibonacci ratio in time? And it does. So on my Excel sheet, I said equals 228 bars multiplied by 61.8% retracement. So it's approximately 140 or 141 bars, right? So 140 or 141 bars. So up to here, I said 140 is possibly where the low is going to be in. And this I posted before the low was formed. And look, the low was formed just before that. And we are currently now passing the boundary of 140. And you have to allow 1 or 2 bars on either side, you know, because it's not exact. And I'm measuring 2 hours as well. So we are approximately right. Now, if this symmetry plays out, then 140 times 38.2% retracement will give you this. Because if this is 161%, if this is 61%, then this one is 38%. So if I put it down, so this one is 61.8%, and in which case this one is 38.2%. So there's a symmetry here, right? Because whole of this is 1 unit, and you can divide them in 61.8%, and the reciprocal of that would be 38.2%. So that gives me this. So I've got 2 measurements now. One measurement is based on this larger swing taking 228 days to come there, and then the shorter one is just using from the high to low 140%, 140 bars. And then if you say that is 61.8%, then the 38% will bring you to here. So now I've got 2 symmetries projecting me to there. So in terms of exact time, it's saying 25th of January. Now you'll see one of my other chart that toward the back end of January, I was expecting originally a low, right? I was originally expecting a low. But in this particular case now, what's happened is the time symmetry probably is still going to play, but instead of a low, we are now going to get a high in that zone. And some folks who are playing with the moon cycle, I don't know exactly when the full moon is, but it might line up, might not line up. If the full moon has already happened, and if it's happened here, then it's marking out the low. And if the full moon hasn't happened here and it happened there, it mark out the high. But I don't necessarily follow the moon pattern, because you know sometimes the moon pattern will give you an exact significant high or significant low. Sometimes it might only identify minor high and minor low. So at what time do you know whether this is going to be significant? When I say significant, I'm talking about substantial swing taking place from that high or a low. Okay, so I'm not too gone on a moon pattern, but I know there are many enthusiasts of that, and if it works for them, that's fine. But this is what I'm sketching out. This is what's happening, and you can see now that the momentum so far, not conclusive, but is so far almost strong. Is literally getting strong like this one, and that's after the flat pattern completing. And also you can see several other features. See, this one I have put on here is showing me, if I put a red line, dark color, you'll see that is given me lower low, and on my MACD I've got higher low. So there is a divergence in that. I've also got time symmetry in here. If you, for example, measure this one from the low to the high, right, it is taking me, or not square, I want a time measurement. So from here to here is giving me 48 bars, right? So if I measure from there to here, is given me 70. Now if you do Fibonacci of this, you'll probably find that this is 38%, this is 61.8%. So you can see now several Fibonacci lining up, and if this happens to be low, then this one is also confirming time cycle related to each other, and it nearly retraced 100%. Okay, so this is a 3 swing, this is a 3 swing, and I'm expecting now 5 swing leg out. So if you are looking for a big mother one to actually play out, where we expect a top to form here, this is the foretest of what's going to happen. This one is telling you that we should be trading long to this one with an aim of retesting this high at least, or coming somewhere around 1075 minimum, but more likely we'll be coming towards 11 to 1150 area, and at 1150 area everybody think this is going to go to the moon. Even those people who think it's a full moon or a half moon, they think they're going to the moon. So once it breaks above here, everybody will be bullish, and I think that will be a perfect trap, because all the weak short, they'll be stopped out because they'll have a stop just above here, and any eagerly long who haven't gone long all the time here, they'll be now tempted to jump in long, and they'll be trapped. And I think that's where the market will turn. That's my cynical way of saying where I think it's going to be, approximately 1150. So I'm expecting this to turn out in 5 cycle. And remember, just like this one here, it took, in terms of time, this one only took like 50% of the overall pattern. So if something similar plays out, then on here, you see this took nearly 140 days. And if we don't measure that, we only measure from here, then it's measured 120 days, right? So in contrast to 120 days, I'm saying 88 days, 88 bars, but it might be that it might actually turn out not 38% retracement of the overall cycle, but maybe something like a 50% of this one, so like 60 days. So this will be strong move, it might be 60 days. So the time zone would be either 23rd of January or about 25th of January is approximate period when I expect this top to form. Give and take a little bit on either side, be flexible, that I'm you know, whatever I'm saying is not cast in stone, it's a concept, but it's a very strong concept with a likelihood of top forming here. And I've already indicated what I'm expecting. On the RSI, I should be expecting divergence. Likewise, this MACD, it will start cycling up, but this MACD will fail to take out this high. So MACD also will cycle up and probably continue to form either higher high and higher low in tandem with the 5-wave cycle we're expecting here, but eventually MACD will fail to take out this side. I'm expecting then potentially a significant divergence with the top formed here, so we'll get a higher high on a price, but lower high on the RSI and MACD on 4-hour and 2-hour, right? And by that time, I'm expecting 5 clear waves to come to completion. So I should be very close to actually picking up an absolute top within give and take, you know, $15-20, maybe $50 maximum. But I should be very close. I shouldn't have such a big target. As I get closer and closer, I'll be able to do couple of other things. What I'll be able to do, for example, is when I get this wave 1, I'll be able to project wave 1 to where the likelihood of this final wave 5 is going to end. Once I get wave 3 done, I'll be able to project very accurately where wave 5 is going to be, because I'll have wave 1 projecting, wave 3 from wave 4 projecting, plus the fact that my other Fibonacci is telling me this little big cycle, 50% extension comes in there. So I will have a pretty tight target, you know, and if that's a target and you're seeing nearly 5 waves, then what Elliott wave allows you to do is not wait for confirmation. You do not then wait for confirmation, because when the confirmation happens, sometimes you know what happened on a final bar, you'll get a big massive bar like that, which will probably finish up with a small body, and you'll finish up with a price that looks like that, right? And you're waiting for confirmation. If it looks like that is better, because like a hanging man is better. You can still enter short, but if this one happen so that it comes down here like that, look at it. Now you increase the risk and potentially you reduce the reward. So if you see 5 waves completing, once this is 1, 2 and 3 completing, then you can get fairly accurate about where the wave 5 is going to be, and you should be beginning to see divergence in RSI almost developing. Plus it is coming to an area where previously there was resistance and Fibonacci, so everything will be lining up there, and you should be looking. You could probably enter, layer a couple of, split your position in maybe 2 or 3 and layer your short entry, one here, one there and one there, for example, with an overall stop just above the 1250. So maximum risk you're taking for possible retest of this one coming all the way down. Now just to conclude this, there was one colleague who commented and said that okay, let me see if I can do a new chart. Okay, so let me see if I say going to make a new chart, and he was proposing another possibility, and it's possible it could happen. So that's why I'm just going to quickly sketch it out and then possibly conclude there, because I think now in terms of time we are going on for quite a while and many of you will be getting tired and our recording will be getting rather long. So here he was saying that we might see this happening. I don't know how likelihood this is, but he is doing this here. He's saying that, and then he's drawing a triangle from here, right? Now that could still play out, but it's not a good triangle, because normally when you have a triangle like that, you don't draw it from there, because if this is the wave 4, then you could have, as an alternative view, you could have A, B, C down, then potentially you get A, B, C up, in which case now you should see A, B and C down, right? So what you should see is this: you got A, B, C down, A, B, C up, then you get A, B, C down, you get A, B, C up, and then you get A, B, C down. That's what you should see. If what he's suggesting is going to be here, then this is what I could see happening. So if I change the color and say make that one different color, okay, so what I'm saying now is we are expecting this to go back up, right? Either up to here or maybe up to here, up to there, and then come down in 5 wave. Okay, so come back and retest this low, retest this low here, so come back almost like that, because we're expecting that as a flat. But it's possible that if we didn't do that, then the flat would still work with this one dropping to here and then going up. But really, if this is to be a triangle, then you need this wave A, wave B, wave C, wave D and wave E. It becomes symmetrical triangle, and normally symmetrical triangle happens in a wave 4. So this is a big wave 3, this would be big wave 4, and then the market could go up. So I'm drawing an alternative so that you are, right from now, you are fully armed whenever it happens, should it happen. So you got two possibilities here, is we get a market coming all the way down from here to there, like that, and then going up, or market doing this symmetrical triangle. But even then, if you shorten it anyway here, I'm hoping that we'll get a higher test. But if you basically short it anyway here at 1050 or somewhere 1025 or something, you're expecting to fall back to this baseline exactly, in terms of time. I don't know exactly when. If it falls here, then it coming to 650. But if it came down sharply, then it could drop down to somewhere about 630 or 600. It's possible. I don't think somehow that's going to be likely, but it's a possibility. So for time being, you wouldn't actually fully prepared to trade that, but you keep it in as a one possibility. So when you're doing trading, you have a couple of sketches, and this is one possible sketch. So I wouldn't deny it. It is possible, but I think there is more likelihood of this one coming back, and personally I would like this one better than a triangle, but triangle equally could work. But if the triangle to work, it must have 5 waves. It must have ABC swing 1, ABC swing 2, ABC swing 3, ABC swing 4, ABC swing 5, and that's done. But so far you can already see that, you know, if you're going to go up, then this 2 cycle are okay, but this one is already failing, because if this is A, then you go for B, and then you come down for C. So if this one is going up and touches almost here, it's not looking normal compared with these others. See, this swing is a clear 3 swing. This one so far doesn't look clear swing. So I think I am leaning on a possibility of this one doing the flat, which we've been just describing in this area, and then coming down to retest either this zone, not a sketch, either this zone here, or possibly coming down to form, as I said, around about 650 area or 600, then going up. So those are possible outcome, but again we will know, because we'll know, for example, if this one goes all the way to there, is a potential flat, we need a wave C. Wave C must have 5 waves, and if we have a 5 waves, then it's not going to be a triangle, because triangle doesn't have 5 waves. Triangle simply has this kind of zigzag, and basically market oscillates and bounces and then get tighter and tighter and tighter. Each swing will be 3 swing. 3 swing down, 3 swing up, 3 swing down, and if it doesn't do 3 swing down on this cycle, it's not going to be triangle. So then don't expect this triangle to hold. Then expect the move to come down to retest this low. So that is conclusion of what I wanted to cover. Hopefully it's useful. Hopefully you have had a thorough understanding, even if you don't understand the rest of the Elliott wave and all the complex rules and everything. If you understand this flat correction, then you may be well equipped to identify them on a smaller time frame and in different cycles, and try and capitalize on it. So what do you think? This is a mystery chart that has held true. Can you analyze? Okay, let me have a look. Oh, something wrong. Not, how come? Sorry, Chris, is not loading. Are you still here, Chris? Okay, no. Oh, okay, all right. Drop that. Okay, so then, okay, so let me see if I can copy that and then go into there. Okay, this is Bitcoin dollar on a daily chart. 150. So you're saying, well, this 150 is a cycle up. Then you go 64 bars, 60, 60, and 60. I can see what you're trying to say. In terms of the actual measurement, I'm not certain. I can agree with this 156 coming down. That's quite clear. 151 has some degree of symmetry, although I think it is not correct. Where you've drawn the 151. And then again you got this that's going sideways. No, I would have an issue with this. There are some symmetry, I do agree, but not in the way that you've drawn them. I think what you've drawn them is almost suggesting trying to fit something. the symmetries usually should be better drawn to identify an actual swings. So when you are looking at this being 150, it's actually 150 going up. The very fact that on your price it looks like it went sideways, but it's not really sideways. If you look at it, this is it's very deceiving, because you've drawn this on a normal log scale, on a normal scale, arithmetic scale. Is it? Oh, sorry, it is a log scale. Okay, it is a log scale. Yeah, it is a log scale. But you know, I agree with this 156. That's quite clear. This one coming down, I think I'm suspicious of why we've drawn 151 from the high to there. Same with this 150, you've drawn it from the high to somewhere which is neither a low or a high. It's like a midway cycle. And then the other points is from this high to this high is 241. So then you've drawn from a high to a low of 216. Well, that makes sense. Then from this high, this 212 you drawn, I think is suspicious. From the low 231, that's acceptable. And then from a high to a high 238, that's acceptable. 224, so you're saying, based on that, on your analysis, you're saying that probably July you're expecting this to go up. But in the same process, are you expecting, no, you're not. From your squiggle I can see you're expecting price to just sort of trade sideways for 150 bars, like you think it traded sideways here. But you see, this one is hiding many sins. You've got this massive swing up and down for 150 bars. You can't call that just going sideways. I don't think it's fair, because what you've done in that, at least in my view, is that you have utilized part of the swing that really belongs to the swing up. If I was doing this, I would say this one, maybe I can't because it's only editing, so I can't. But I would say that from here it should be more like you should be drawing from the high to a low, or low to low, or high to low, or high to high. You know, you have to take the high pivot to high pivot, or high pivot to low pivot, or low pivot to low pivot, but not the way you mix them up here. Some of them are good, and some of them I don't agree. And I think there may be an element of over reading in trying to get the symmetry, in my view. But you know, that's not to say you will be wrong. But I think, to be objective, I think you probably decided to see some of the symmetries. You picked up on what looks like working, and then you basically projected that, and now you're using that to help you project where the time is going to be. So nothing wrong in that, but I think if you're right, then you're expecting another high, possibly by mid-July, early July to mid-July, or late June. You know, I'll give a week or two of possible leeway. And the red block is where you're expecting 150 days to go sideways. Now in that sideways, you see, what you don't know is the price going to do exactly here, because here you can see there's a massive swing up and down. It's got A, B and C, you see. So if we did the same, we had A, B and C, it won't just go sideways, it can actually drop, you know, as I was saying, probably 450 or anywhere, then probably go up. And in which case, based on your analysis, you say, well, it still works, because 150 bar you're expecting market to congest sideways or possibly correct, and then continue higher up. So in the higher up, you are reckoning that each swing up takes about 80 bars. So based on that, you'll be looking for a high here. So you could be right. We may find that within this there is a possibility of forming a low and then the market rallying. So, you know, not completely out of it's a good idea. I wouldn't throw it out of the window altogether, but I would query why you've drawn 150 bars in some area where it's clear, you know, part of it, quite a good chunk of it belongs to the upswing. simply because you're trying to say it's going sideways, but it's not. You can't say it's going sideways, because if you did that, then you'd say this move up and look from all the way to here to all the way to there is a sideways, because that's what the market did. In this picture magnified, you can say potentially that all this went sideways right up to here. So then if you did that, then your picture would change dramatically, and your outcome and likely expectation would also change dramatically. But you asked me to look at it, so I think that's what I see. And I apologize if I didn't sort of quite meet up with your analysis there, but looking at it objectively, I wouldn't feel entirely comfortable with that. Great, thank you, Stuart. Atar, anything else? Okay, well, it looks like then we've covered it thoroughly. So thanks for being with me. I'll stop the recording to stop it from getting extremely long.